They're going to watch that screen. You guys get the real deal here. I'm going to do a couple dance, a little jig, a shuffle and stuff. We're going to get this party going. So, first off, I want to thank Blockchain WTF for coming here and filming this excellent setup. I want to thank our co-host, Daniel and Paul with Allometric, our sponsors with Athena Bitcoin and CoinFlash app. Look up both of them, both great products. CoinFlash app rounds up your crypto, or rounds up your change to buy crypto, and it's built by a guy, a father of three here in Chicago. So definitely get that just because he's part of our community, right? And Athena Bitcoin is a great company that's been sponsoring all kinds of meetups, including the Bob meetup, another meetup, Brooks back there, Bitcoin mom, and Jack Mullers and her husband and his father, Bill Mullers Jr., who's going to talk about the CME Bitcoin futures in a little bit. But for now, we're going to start you off with, I'm going to give you guys a little presentation on blockchain for sea levels, which I'm actually doing a presentation at Symantec on Wednesday, and this is a presentation that I have to give to them and try and make it concise. So you guys are my guinea pigs, and I appreciate you for that. Give yourselves a round of applause. Come on, a little energy in this room. I can't do this by myself. Look, this is a meetup. This isn't a conference where you're paying a lot for it and such. So just have a good time, relax, use a plastic cup so nobody has to clean anything afterwards, right? Pizza's gonna come in an hour or two so you don't get hangry. And we're just gonna enjoy ourselves here because this is all about just learning. We're kind of chain agnostic in this group. If you're in it for enterprise functions like Tom over here, his consulting group, finding the use cases in that side, or if you're with IOTA, or you're a WordPress developer, or you're just making t-shirts or films, whatever it is that you're doing with crypto, we want you to be a part of the Chicago community. So Chicago Blockchain Project Meetup is all about that. And our co-hosts, Daniel and Paul, give a round of applause for them. They'll put this on. It's the Chicago Entrepreneurs Meetup. So they work out of Techstars with their company Allometric, and they're going to be talking a little bit right after me, and then we'll have Juan from Open Finance and Tor with Enigma project coming up. So hopefully it's a good evening we put together for you. So to start out, I was thinking this is a really good explanation of any conversation where you start talking with somebody about Bitcoin. Like in the beginning, we had to find out the concept of zero. You got to start from the beginning. Anybody see that Antonopoulos talk where he talks about the first ledger ever was probably in a cave where they said, you owe me this many goats and I owe you this much hay or wheat or whatever it is. So we do have to start from the beginning. And Bitcoin is the beginning of blockchain technology. Most of you guys know this, a few of you, Dwayne, who are a little bit newer. This may be a little bit newer information for you, but let's clarify a few things. First off, I want to clarify Bitcoin with the capital B, Bitcoin with the little b, and Bitcoin with the capital B referring to the software of the blockchain technology that was invented. All right, the little b is going to be talking about the currency or the application that is being done on that software. So Bitcoin is a protocol, a collaborative network that proves a few things to us. One of the ones that I connect with the most is that when you join this network, it's a system of equity in its governance. When you buy into this network and buy your token, you become a stakeholder. When other value comes into the network, it's spread equally amongst all the participants. That's what a collaborative network is really going to do. And you have autonomy. You can sell out of it, right? If you don't like the way that government's working, you can just sell right out of it. That's a real cool thing about this currency. But to understand the whole world, and you're getting in here, and I remember, raise your hand if you've lost sleep studying like blockchain technology or looking up cryptos. Okay, it's just what it does to us. That's just what it does. I've rarely met somebody who doesn't do that. And if you didn't, you need to lock yourself in a room and just look up Bitcoin and study Bitcoin for a full day. All right? And then you're going to start losing sleep for the next 2 weeks. Because once you get in it, it's a rabbit hole. All right, so let's start to talk about this technology. What is a protocol and a platform, and where are we going from here? So once you learn about Bitcoin, you start learning about Ethereum, and you think, well, what are these differences? How do I make up my mind on which one it is? And I would say to you, what you should do is instead of just buying a couple different coins, seeing which one goes up, seeing which one goes down, you invest your time into learning things about the system. So Bitcoin originally was the software and the application presented to the world at once. So it was like when you bought a phone and the game on it was Snake. Sure, it's a hardware where you could change what is happening on that phone. You could get in there, somebody programmed it, right? So you could get in there and program it to do other things. And there's a lot of people working. Actually, Jack in the back had a great tweet today. He was talking about the VC funding model and how a lot of people don't understand where in this model, what you're really doing is you're buying the underlying asset, the Bitcoin currency, because you believe in the software around it and the community around it. And then you build items around that community. You collaborate with that community. You bring the whole value of that equitable collaborative network up. And that's a really, really powerful thing. Now, Ethereum is trying to do a very similar thing. They're trying to make this network. And what they said is the game or the application that's doing shouldn't necessarily be chosen for you. We're going to make it as easy as possible to be able to create your own application on top of it. All right, so it's kind of like when you had the iPhone and you could go into the App Store and you would buy your games. You would select which different game. So different people out there, different programmers could make their own game. Now, I don't want to make you think that one of them's old and one of them's new and shiny. The point is that one of them was introduced to the world with the game on it already. And one of them said to the world, you know what? Go and build the thing. All we are is a platform for you to do that, a protocol for you to do that. So when you start to think of these blockchains, it's very simple to think of it, for me at least, as the blockchain itself is kind of like the hardware in a computing system. And the software that you're running is that OS. All right, so the protocol and all the computing is now actually starting to happen in the cloud. You're not just paying a little bit of rent to Amazon to borrow their server. Instead, you're using the network to do this process for you. So in theory, that's going to work. However, Bitcoin's proven. Ethereum, you have the top guys. You have Vitalik saying, do not run mission-critical apps on our system just yet. Doesn't mean he doesn't believe in his own product. You have Vlad Zamfir, their head of research, saying, guys, slow down a little bit with these ICOs. It's not necessarily that time yet. Just because it's out there in the world and you can make it doesn't mean that you have to. It's like people are acting like my brother when he comes home drunk. He just can't stop himself from going to the refrigerator and eating like 3 meals of food. There's just no way to stop him. All these people out here are drunk. They're just going out running ICOs. They just can't control themselves. They're doing this, and the head guys are telling them, no, you don't want to do that. Stop that. Hold on, because this is what it is. Vitalik said that Ethereum right now has the processing power of a computer in 1960. It's like getting into a car without any tires and without an engine and saying, man, this thing's supposed to be the future, but there's a lot of problems. It's kind of bumpy, isn't it, guys? You guys feel that bumpiness when you're riding the Ethereum train? You see these hacks, you're like, man, this isn't what it's supposed to be going on. Well, some of us and some of the people that are running that project have thrown that warning out loudly. We haven't even put tires on this car. Get out of the car, you idiot. Stop driving it. It's going to be ready soon, But we still have a roadmap. The Casper protocol for Ethereum was on the roadmap for a couple years now, and we're not there yet. There's been upgrades, and we're celebrating some successes as it goes, but it's not quite there yet. So you got to understand where that is. Now, this is the most important thing to me, is really understanding what is happening with the blockchain. Because there's the enterprise groups that are looking to do something very akin to repackaging and selling Google Sheets to all the enterprises of the world, right? But they want the timestamping and some of the protection for it. And then there's the Bitcoin, which is going to literally disrupt everything about our society, our lives, and how things are going to work. And Ethereum is trying to do that too. Like I said, it's not fully proven yet in the same way, but it's getting there. It's building. So public blockchains, this shows it equivalent to the internet in the 90s, when everybody was saying, no, guys, the intranets are what's going to be successful, these intercompany internets where the information can be shared only between those who we allow to give access to it. Now, why? Why is that the best way to share information? Anybody want to tell me? Because you want it to be yours. You want it to be proprietary. You want to outcompete somebody else rather than collaborate with somebody else. Now, these intranet versions, what they call federated blockchains or private blockchains, that means how many keys are there out there? Who controls the governance of the system? You're choosing the governance right here. So in a federated blockchain like a Ripple or a consortium chain, a lot of people call it, you have 5 people maybe hold the keys because these 5 people can't trust each other. Like the big banks in 2007, they couldn't trust each other, so they had an independent rating bureau in between them because they could trust that that central authority was making sure that all the transactions were good and valid. That independent rating bureau that they could trust. When you send a quick pay, Mike sends me a quick pay, Jeremy sends me a quick pay, it doesn't go from him to me. We both trust that authority to say that it's there. So 100% of our trust is put in one entity. Now, if you're Chase Bank, it's fine for you to trust one entity, just like I trust myself to most often not do something stupid. Seems like a reasonable trust to have, right? Now, that's all good until you have Newman from Jurassic Park, right? Then all of a sudden you screwed up that system. So we have a problem there. Now the federated chain, you go back to that, now we have the 5 people who don't trust each other, but somehow in 2008, they were able to buy out the ratings bureaus, and they were able to change the whole system and crash it all down on us and spread the accountability of what they were doing out to the public. All the taxpayers paid for that. Where was the accountability? That was an independent oversight that they had to buy out, and the system pushed them in the direction that they were incentivized to do such because of the competition. Now, in a federated blockchain, if you're trusting your money being sent between maybe 5 banks, what we're saying is let's get rid of the independent oversight and let's put where the clearinghouse was, we'll put a blockchain. And then the people who control that blockchain will be those 5 banks. We'll each give them 1 key because we can trust that they will not collude with each other. You see where I'm going with this? You see where I'm going with it? It seems a little ridiculous. Now that doesn't mean that there's not good use cases for a blockchain that is shared. What about governments that need to share data? Raise your hand if you heard horror stories about the VA not having information for veterans, medical records and so forth to be easily accessible, and these people had to suffer for months and years because their information was stored in a antiquated way. Yeah? We all know that. So there's use cases for these. And what happens when somebody is paying someone to work on these types of use cases. There's somebody out there who's young and inspired and they want to work on blockchain, and maybe an IBM gives them a shot. Maybe an IBM puts them through some training. Maybe IBM is sponsoring a college program where they learn about working on blockchain technology. It would be amazing if we could decentralize everything right now, right? And live in this perfect world that we're all dreaming of. But who's going to train the generation that is going to build the decentralized web? I'm okay with IBM and Microsoft and Facebook and Google dumping millions of dollars into training us how to create our own future. I'm okay with that. So that's why the Chicago Blockchain Project Meetup, we try to stay a little bit agnostic to those thoughts of, is it enterprise, is it, the federated, is it a private blockchain, is it Google Sheets, is it Ethereum or Bitcoin? Because we just need people who are going to be a part of the ecosystem right now and train themselves. When I talk about this decentralized future, this, just like blockchain, is getting thrown around all the time. Nobody has any concept of what the hell they're saying. They're just using the words. It has no meaning. So this comes out of one of Vitalik Buterin's posts where he talks about decentralization, what it really means. Architecturally, how many physical computers? If something's attacked, can you protect the system? If one computer goes down, does the whole system go down? No, you need to decentralize it architecturally. Think about all the Vietnam movies when they're going through. They're not all like huddled together like, guys, just hold my hand. Come on, let's get through this. No, they decentralize. They get in this big long line, right? And they're sending their little signals because they're harder to hit. You can't attack them all at once. So we need to decentralize architecturally like that. And that's what these systems are doing. Politically, that means who controls the system? Who has the keys to change it, upgrade it, or destroy the whole thing? So politically in Bitcoin, everyone who's a stakeholder actually has a little bit of say in what happens. It's not 5 guys that decided to keep the keys in their federation. It's not one person who's controlling all the information in their company, hoping that they don't get attacked from Newman. It is every single stakeholder. So who's a stakeholder? Go ahead, yell it out. Who's a stakeholder in Bitcoin? Somebody who holds it. Who else is a stakeholder in Bitcoin? Somebody running a node. Who else? The miners. Who else? Merchants who accept it. Who else? Core developers. Who else? This is an ecosystem, guys. Manufacturers, traders, exchanges, entrepreneurs who are spending their time building things for the Lightning Network and building all of the things around it that will pick up the value of that underlying asset, which will appreciate in value in an equitable way, because the governance that we have chosen to partake in Bitcoin is a system that actually does have an equitable system. It doesn't mean that one person can't create more. It just means that we all pick each other up. No one person's Bitcoin is more valuable than everybody else's Bitcoin. Centralization, although not as important to understand, is really interesting. I like the example that the English language is logically decentralized. Because unlike a worm where you cut it in half and the two sides live on as their own thing and act pretty much the same way, In the English language, you cut it in half with the Atlantic and you have two different dialects. They have a common history, but when they spread apart, you have two different dialects that form off it in the future. It's just a fun thing to think about. Now, the crypto economics of this whole thing are a real interesting part of it, because what the crypto economics allow us to do is find a way to decentralize the trust. In Bitcoin, you have to spend something to be able to win the reward and create Bitcoins, to mine Bitcoins. You're spending money on electricity. And at the same time, you're trying to solve this puzzle that takes about 10 minutes to solve. And if during this time you give any information that's against the consensus of the network, you got to start your puzzle all over again. So now you can't win the reward. So now you're spending money with no ability to make money. And that's very important. That stops spam from hitting the network in that way. It stops people from having no reason that they shouldn't attack the network. You want them to think, I am going to lose money if I act poorly or in a attacking way against this network, as many ways as possible. So that's what that does. The crypto economics say, you're going to lose that money. The crypto economics also say, when the value of this goes up, and you start saying, hey, Jordan, man, I've been mining these coins for like 20 days, and I'm just getting paid to let my computer sit there and run, and this thing's going up. It's like $5 now. I just get money for no reason. Jordan's like, you know what? I would just run my computer for you anytime because you're a friend, and I would run my computer for you. But you're telling me I'm going to make some money? Hell yeah, I'm going to run my computer for you. It's a little bit different when you're incentivized, right? So that's crypto economics. It encourages the decentralization of the system. So there's a lot of different systems that are out there right now that are looking how to do that. Ethereum is looking at proof of stake. How many others can we name real quick? We have proof of work, proof of stake, yell one out. Proof of authority, yell one out. Proof of burn, come on. I've heard existence, come on. Keep going. We could keep going a few more, and then you can start adding other things on, like delegated proof of stake. What's that? Right? There's a lot of these consensus mechanisms that are out there which are trying to solve this problem in different ways. Now, what about these DLT solutions? Anybody know IOTA? Or heard about Hashgraph Swirls? Or Swirls Hashgraph? Or IBM Hyperledger? Are they doing the same thing? Are they recording transactions, and then once they filled up that page, they seal it up, they put a start hash and an end hash, and then just like Uno, they got to lay it down so that hash is matching the start hash of the previous block and the end hash, and then they just pile them up. No, they're not necessarily doing that. And is the trust in that system distributed between all of the stakeholders? When you look at these, that's what you have to ask yourself. Because so far, Bitcoin is the one that has completely equitable system thus far, right? But we're at the beginning of this. And some of us choose to invest in Bitcoin because we want to be a part of that community and bring it up. Some of us choose to invest in Ethereum because we want to bring that community up. We believe in the values that are behind it. But who here believes in Ripple? No, it's that federated chain. It's the idea that we're going to give those 5 guys the keys to the chain and think that they're not going to collude. When they had to pay off the ratings bureau, they paid it off. So why are we just going to give them the keys? It's like buying a DVD set of The Cosby Show. Like, you might get a good time out of it. Maybe you make a little bit of money. But where are your values? What are you going to stand behind? Because in the public blockchains, what's going to happen is your values are going to determine what has value. Because that's how these crypto economics work. There's an incentive system. And if what you're doing is right, to you and your community around you, what you're doing should work. Unless you're short-sighted enough to say, I'm going to put my money into something that doesn't have my values. And you're going to make that other network stronger that really doesn't believe in what you believe in. And this is what I'm talking about when I say I'm trying to feed people their decentralized vegetables. I want you to understand how that works. All right, everybody's entertained by the ability to get a 4,000 times return, right? I've never heard of people talk about investing saying 100 times it, man. Like all the time. Who's in the Chi-Town Crypto chat channel? It's a good channel to meet people in the group and so forth. Find people who work with, do projects. In there all the time. Every 10th message has at least a 50 times or 100 times. Anybody work in financial markets? How often do you hear 100 times seriously batted around when you're on the CME floor or the CBOE? Not quite as much. So as we build these new systems and we try to follow our values, what we're doing is we found the desert island. All right? And it looked like this. Because right now we have protocol all around us. Look around you. Are the chairs all different heights? Do the chairs match the tables in the right height? When you wake up and you pour your first drink, can you put a little hose on your faucet? There's a lot of protocol, right, in the real world that lets everything interoperate and work together. But when you have that desert island or the forest, the wild, the digital wild that's out there, we built one protocol, basically, our little TCP/IP, the HTTP, a little teaser to let people say, oh, we can communicate with each other. And then we stopped building protocol because the applications were what paid us. But what we really need to do is figure out this system where the lanes are 8 feet apart, so we know how big to build our cars that are going to drive on them, and to make sure that I'm not crashing into you because we're driving on different sides of the road. It's a different thing, but the protocols that we build are going to allow us to build great platforms. So when we talk about investing into the underlying asset, we're talking about something where the crypto economic system will say that that protocol has value. And here's an easy analogy for that. How much would you pay for everything that you plugged in, every camera, your iPhone, everything, to be the same plug? How much would you pay per month? Shout it out. 100 per month? How many chargers do you lose, man? You gotta stop putting your chargers there. Maybe not 100, more than 10 cents? Probably. How much do you spend on new chargers whenever you have to get a new iPhone, right? So if you could have a token that would give you access to be able to say, I can always use this product, I can plug it in, right? The protocol is gonna work, and I can participate in it by having that program, or that token. And the token is going to be the price that the market sets for it. So at what point, if it's 10 cents, do you buy it? Is that less than what you're spending right now, buying all of your chargers? Every camera, everything that comes out. Now at 20 cents, would you buy it? Where would it be? That's how the market sets a price for these protocols. Now, if the protocol is open source, somebody's building that. Somebody's building it, and they get one shot to build it. And they don't necessarily know that they're going to build it well, but they get one shot, and they can raise money now for it through these token sales or the ICOs. Dirty word now. They can raise the money because it is now what they call the FAT protocol. And I was expecting more laughs with that picture. I really was. Man, what the hell do I got to do? So what the FAT protocols are we're building a bunch of protocols for interoperability that are going to allow you to, one, have different digital systems that will interact with each other so you can collaborate because you understand the languages each other are speaking and you know how to place a token into a system. Or when you start building a wallet, it'd be like trying to build a car and you're on that desert island with no road. You have no clue. How big should it be? Should it be 12 feet across? Should it be 2 feet across? I don't know. ERC20 tokens said, well, in Ethereum, what we're going to do for this is we're going to say on our roads, it's always 8 feet across. All right, that's what we're going to do. So as you build more and more protocols, like the two lines that were in between it, you start to build more things. So we can fund these protocol building by doing the ICOs, doing our due diligence, and taking personal responsibility in the democratization of access to venture capital style investing. Because I'm not an accredited investor, but that doesn't mean I'm a moron. And if I am, well, let me suffer for it. But I want to have the same access, because the same access is what an equitable system is. And we're seeing already in Bitcoin what kind of returns an equitable system provides to people. So that's why I'm going to build around it. That's why I'm going to believe in it and put my values in it. And that's why I'm going to do the due diligence to not fund projects that do not fall in line with my values. I'm going to do the due diligence to figure out which protocols do we actually need that a company is not going to fund because they're not going to get paid off it. Who gets paid because our roads are 8 feet apart? But we had to figure that out. We had to do that. We had to build the roads. These roads are built unless it's a tollway. Do you want our digital world to be all tollways? Or do you want to have access to these protocols that are built out there? That's the open source of it. And then I hear people say, let's cap the ICO. Let's tell these creative people who are going to create a protocol for the world that they shouldn't take that much money because that's not what they need, or it's being greedy. But nobody tells Bon Jovi, hey dude, $200 is way too much for a ticket. Just charge $10. That's plenty. That's good enough. Now, why don't they do that? Because he created it, right? And even if he sold them for $10, most likely, would you get them for $10? No, because there's a market out there. That market is going to eat those tickets up and then sell them out to you and everybody out there for $200. And would you rather pay the rent seeker in the middle, or would you rather pay the person that created that music, that product? So let's think diligently or intelligently about who's being funded and how in the market that money gets back to the people who are doing the creation and the stakeholders in the system. Now, this is last year's ICO numbers. When I say that we're democratizing the access to the venture capital style investments, the high risk investments, it could be a little bit scary. But last year we were just under $1 million and majority infrastructure, and we're quite a bit lower on infrastructure now. But we raised $3.2 billion already this year. That's a huge return. Anybody know how much they've raised in VC funding so far? Anybody gonna give it a shot? Like $500 million. So, this is very quickly antiquating that model. As long as we don't fuck it up, guys. All right? Let's not screw it up. We are being given an opportunity to democratize the access to these types of returns. As long as we don't keep doing stupid things, we'll be able to spread that out to everybody to be a part of the system, that you can get your funding without being at the beck and call of your investors. There's a lot of projects out there, especially like social enterprise projects, where you can't be at the beck and call of an investor because the project invests back into itself. The project sees social good or not hurting the environment as equally impactful as the profit that it generates. Not necessarily more important, because it's not a charity aspect. When the economy went down, the big donors weren't giving money to all the charities. Anybody work with a charity where their tech is like 10 years old? They're still using WordPerfect or something? Part of that's because they don't get the consistent funding. So for it to be sustainable in a system like that, it needs to be profitable. It needs to be bearable. It needs to be viable. It can't be bad to use up all your resources. And we are the ones who are going to be deciding. We're the new kids on the blockchain here. And we're going to be creating these systems of collaboration. Just like Bitcoin is created a system that incentivizes the collaboration of all those stakeholders. Even with the infighting, internal competition, it's still a collaborative network where they build together. Because if you didn't like the governance that was coming at you, how many people heard somebody say, I'm going to move to Canada if Trump gets elected? Somebody said that, right? That you know. Yeah? I need at least one expression out of you. I haven't even gotten like a yep. I'll take it. The thing was nobody did because they didn't have life there. They didn't have the ability to opt out of that system. We right now have the ability to opt out of these currency systems. And we can opt into systems of collaboration. I think that's one of the number one things we should be looking at because Chicago's got a lot of potential here. There's a great crowd. I've seen a lot of projects start at these different meetups. I actually love all of the meetup groups that we have. Conrad's Ethereum meetup, Daniel's Entrepreneur, Paul's Entrepreneur meetup, the Bob meetup. Those are some of the best events. Anybody go to the Antonopolis event? That was awesome seeing that guy in person. Like, that's my hero. It used to be Michael Jordan, now it's Antonopolis. Grew up a bit. So, what I'm trying to do for collaboration with the Chicago Blockchain Project and the people from our group who are working on it and with it, and the people we're collaborating with, like Daniel and Paul and Blockchain WTF filming today, guys, you gotta check out their videos. Their videos are phenomenal. Like every YouTube video you see is just some dude in front of his thing, and then he makes the screen big, talks in the corner, right? All theirs are well produced and really cool. They got a blockchain token, what is it series that talks about what the specific tokens are and stuff. But they're doing a lot of cool work. And if we're meeting up together and putting together information, well, why can't we collaborate and give them some of the information that we have? Because how is Chicago going to be the best place in the world to live in and work on a blockchain project if we're all stuck in our little silos? If we're living like it's Web 2.0, how are we going to usher the world into Web 3.0? So what we're trying to do here, and I see a few faces that came out Sunday morning at 10 a.m. We had a group of 8 people come out and sit here and do research together and figure out what information did we need to compile and how we going to work and build the web crawlers to get information and so forth to get all of these shared knowledge things that could help all of our individual projects and companies. And even the guys, one of the guys is a truck driver by trade. He never felt like he could go out and do his own thing because he has 2 younger siblings and he had to pay for them and the family to be, fed. Reasonable thing, keeping food in your family's mouth. So he never took the approach to fear of going and being an entrepreneur. But here, because he believes in the Chicago blockchain scene, all of the meetups, all the groups, everybody who's dedicating their time and resources to making this community better, he was able to meet people who gave him a shot at helping with building websites and teaching him that side of things. He's become one of the most committed, dedicated members. I'm upset he couldn't be here today because he is an example of people being able to develop a new inspiration. How many of you guys are inspired right now to be able to go and start a new project? How many of you are pretty excited because of where we're at right now? It's cool. It's fucking cool that we're here. It really is. This is an opportunity for all of us. And I want you guys to do it with me. For sure. I'm going to leave you with one more thought. Because I like to get philosophical. That's my meetup, so. Right. The idea of digital evolution, I noticed that these blockchains kind of are under their own control. There's a lot of little cells in here of us who make up what's happening in the ecosystem. Sometimes we get a little sick, we don't agree with ourselves. Sometimes we get downright angry at the other parts of the ecosystem. And we don't know why. There's some pretty shitty parts of it. They are doing evil things. And then there's us. We're trying to learn. We're trying to make things better. And I thought of these blockchains that they have these forks, and the strongest one ends up surviving, right? Kind of sounds like something, yeah? One of them goes on to survive. These forks, they just keep happening. They keep spreading out. And they follow a direction. They need energy put into them. Like a plant that leans towards sunlight to get energy. Where does a blockchain get its energy? It's from us. It's from guys like Jack building on the Lightning Network and building new things. You know, it's like the innovation, you know, that the team at Ethereum had to go out there and create something new and something interesting. And we'll see if it's fit enough to survive. But it definitely leans in one direction or another, and that is because in this system of rules without rulers, the system itself is going to be guided towards where the most energy and effort is put in. And I know for sure the people who are working the hardest right now at building Web 3.0 are building it because they believe in the promise of blockchain. And they believe that that means that our governance that we can have through our currency being separated from state is going to be a governance that we choose by putting our values behind a system to give that system value. So that is what I wanted to present to you guys today. That is it. You can give me applause. That's fine. I'll take it. I'm shy, but I'll take it. And I would like to bring up next, we got an awesome show for you guys. This is going to be really good. Next, we're going to bring up Daniel and Paul with Elemetric. They're going to take 2 quick minutes to tell you about the project. They are running the Chicago Entrepreneurs Meetup, Blockchain Entrepreneurs. And go ahead, we're going to have Juan up next after that.
Thanks, Joe. And thanks, everybody, for coming. I know we've seen a lot of you guys before. Paul and I run the Chicago Blockchain Entrepreneurship Meetup. We usually hosted it in 1871, but we're partnering with Joe today here. For anyone who's interested in startups working in blockchain, we usually host 1, 2, sometimes 3 companies in a week, give presentations, and sort of talk about how they're using blockchain technology for early stage startups with different topics every week. So look for us on Meetup. Paul and I are also the co-founders of a company called Elemetric. We're building an API service for the blockchain internet. So if you know anyone that's either building blockchain applications as a startup or works at a larger company that has APIs they want to transform for use on blockchain, come find us after the meetups, and we'd love to have a conversation about how they can use our platform. So without further ado, we'll bring up Juan Hernandez. Juan's from the Open Finance Project. They're building an operating system for financial markets, and I hope you guys are excited to hear more as I am. So thank you.
All right. Welcome, everyone. Thanks for coming out. Very, very impassioned talk by Joe, as always. It's a very tough act to follow, so I don't think I'm going to be anywhere near as exciting as he was, but I will try. So my name is Juan Hernandez. I'm the CTO at CFX Markets. We are a trading platform for alternative assets. Now, these are not the alternative assets you guys are thinking about here. These are actual assets not based on any sort of cryptographical proof or anything. It's a very antiquated concept. You may have to ask your parents or your grandparents about these types of assets. I'm sure they have some in their portfolio. So we're focused on this $90 billion industry, this non-listed alternative asset industry. These are all securities that are registered with the SEC but are not listed on a major exchange like NASDAQ or the New York Stock Exchange. That's our bread and butter. That's our wheelhouse. That's where we like to play in. And even though you may not have heard of some of these assets like non-traded REITs, BDCs, Regulation A+ securities, there are millions of investors in these assets. And so we help them find liquidity. We effectively run an exchange that matches these buyers and sellers. So our team is comprised of industry veterans, technologists, exchange technologists like myself, securities lawyers, trading veterans. And yeah, we actually closed on a nice little Series A round, a Midwest Series A round a couple weeks ago with some nice local VCs and New York-based VCs. So, and so these are some of the people that we work with. And hopefully you guys recognize some of the names up here. You've got your Merrill Lynch's, your Edward Jones, your Pensco's, Schwab. Did not make it up there, but we work with Schwab as well. Ameriprise, LPL Financial. We work with a lot of the leading issuers and portals in the industry. Inland, Hines, KBS. On the crowdfunding side, we work with Fundrise, Realty Mogul, Start Engine, WeFunder, CrowdStreet, and we're expanding our network as well. Then on the regulatory side, we work. We're under the purview of FINRA and SEC. I know no one's a big fan of them, but we have to operate within the confines of the rules that they lay out. Other regulators and associations that we work in include the STA. And then other bodies as well. So actually, I'm going to jump forward here. So let me walk you guys quickly through a trade life cycle after you actually make the trade. So I'm sure everyone knows about, you buy, you sell stuff on an exchange. It's pretty straightforward. But I bet a lot of you have never put thought into what happens afterwards. How does that share of Google stock or whatever your Facebook stock actually then end up in your portfolio with your brokerage firm, and how does the seller then get the funds to them? And so, I'll walk you guys through this little spider web up here to give you a sense for what happens today in modern markets. And this is not, it's obviously a simplification, but this is a reflection of what's happening on NASDAQ today, what's happening at the CME, what happens in our marketplace as well. So you've got the buyers and the sellers. They work through their broker, and then they meet up at the exchange, obviously, and that's where the match happens. But then afterwards, those trades themselves actually go to what is called a central counterparty clearinghouse. And what that entity does is effectively ensures that the seller actually owns the asset that they're trying to sell and that the buyer has the funds to actually purchase that asset. And so it effectively eliminates or reduces counterparty risk. What you may not know is that this organization is actually a industry utility. Basically, all the different brokers that you guys work with, they actually pay into this entity to ensure that if somebody actually does default, then there's almost like an insurance plan to provide the coverage for that transaction. And so the central counterparty clearinghouse effectively just sits there and ensures that everyone's playing honest with each other. From there, it goes to the seller's custodians and the buyer's custodians. These are the banks or the firms that actually are holding your money, or they're holding your actual shares. And then it goes to this thing called a central securities depository, which effectively acts almost as a golden source. And so that entity maintains a central database that is sort of what everyone else calibrates off of. Then it goes down to the transfer agent, and then it does other asset servicing stuff. Now, what's really interesting here is that every one of these boxes here, everyone has their own local database that they're maintaining and that they're then trying to reconcile with each other across a typical trade life cycle. This is why trades still take 3 days, for example, in public markets. In our market, they take a lot longer, but basically every one of these intermediaries is every day manually reconciling across the network with each other. And so obviously a lot of big problems there, right? Redundant data across multiple intermediaries. this manual reconciliation leads to long settlement times, and there's a lot of single points of failure and fraud. And this is a known problem. There's no single institution that has a master record of all executed transactions. And this happens not only at public equities, it happens at options levels, it happens at pink sheets, over-the-counter stocks, and it also happens within our industry. And so obviously, when you see a diagram like that where you have two entities in that diagram that literally have the word central in their title, you know what this is ripe for, right? It's ripe for disruption and disintermediation. And so this is the model that we're working on. This is the model that we're piloting right now within our industry. Effectively, we've brought, it's a very practical application of technology. We've brought forward this, instead of a centralized resource that serves as a database that everyone manually reconciles off of, we've created this mechanism where there's a decentralized shared ledger that all of the different players in the industry can calibrate off of. And so this is something that we're currently piloting. Obviously, the benefits there are pretty evident to anyone that's studied anything in the space. So I won't just repeat myself. But I did want to take some time, I guess, during this event to talk through some of the lessons learned, some of the pitfalls that we're already seeing as we're out there in the industry piloting this. Some of the feedback we're getting from the industry participants. Some of it's been good, some of it's been bad. And then open it up to some questions, and I'll dive into one of the pilots we're working on after this as well. But I know that the intent of the event is this C-suite type session where we're looking to see what are some good use cases of blockchain technology in actual modern day infrastructure, right? At least that's what I was told the intent of this event was. But yeah, I definitely want to talk through a little bit of that. If anyone has any questions right now, I'll pause and kind of work through some of that, or if not, I can just share some of the insights that we've had as we've rolled this out to market. Yes. Wait, this gentleman first.
So when you're looking at securities that you're trading, are they privately held securities? Are they public securities? In order for it to basically be open, how do you get information about what is actually in the security in terms of that?
Yep. Yeah. So great question. So the large majority of our assets are publicly registered, meaning they are registered with the SEC. So there's a filing for them on the Edgar database, and they are required to do quarterly audited financials. And so that's where the bulk of the public information comes from that the participants in the market use to conduct these transfers. With private securities, it's a little bit trickier. At that point, it's up to the issuer as to what they want to disclose, but those don't trade as much. So then you get that trade-off, right? Obviously, private securities that don't have much public available information will not transact as much because, quite frankly, there's just not enough information to make an informed decision off of.
Well, when you talk about the public, one last question about public securities, are those funds then that are basically where they've made investments like a private REIT
Yes.
or whatever? So you have to
Yes.
understand then what their investment mandate is and what they're
Yes.
actually investing in and that. And can you get good information on that, or is there an information advantage to some people versus other people in that space?
As would any, I think as with any securities, as with any publicly registered securities, there is a little bit of information asymmetry. However, for the most part, one of the things that we do provide is live historical data. So then you can see basically what the asset's been trading for in the last couple minutes, and then you can make your own decision off of that. So, question over there.
CMO problem, the financial crisis 2008, basically landed irresponsible lending. And for the CMO issues with the Apple trading for that analog and the digital cannot reconcile. With this model, your model, solve that problem.
So the question is, will blockchain solve the digital?
CMO or maybe too early.
I think it's a little too early to tell. Certainly, I can walk through some of the applications that we're seeing right now, and one of the early, issues we ran into and that we're still working on overcoming is how do you get these established companies to build into blockchain? And certainly that's, a lot of these companies who have not innovated since 1998, to ask them to start adopting blockchain technology is always a big challenge. And so what we have found to be effective is, quite frankly, you don't tell them they're building into blockchain. You simply build into some of their current infrastructure. Some of these guys don't even have APIs. They just have like flat file formats you can push into. So you integrate into whatever sort of mechanism they have, and they don't need to know that they're using blockchain, because quite frankly, that's no different than you telling people, oh, I'm using Mongo now. Like, what do you think about this? You want to build into Mongo with me? No, they don't care. And so that's one of the tactics that we have found to be very effective in this model, that when we talk to certain participants at these parties that we're building into, certainly the younger executives at these firms are very excited by the fact that we're innovating in the industry. However, once you get to that C-suite level, you really have to stay away from using certain buzzy terms that might scare them off, and just kind of talk about, leveraging new technology to streamline operations and create operational efficiency and reduce, redundancies and eliminate, all those, terms that they like to hear, right? I think, when you've got some of these large corporations that are very risk averse, you need to stay away from using some of that terminology that might shoot off some red flags, and now they got to bring legal and compliance into the room to figure out, is this okay for us to use this type of technology? And so that's one of the areas, if you note here in our diagram, certainly there are opportunities for us to continue kind of and try to capture additional business methods in this ecosystem. And for us, we think, we have to collaborate with some of these other participants, and we have to build into them or include them in the process, because there's no way that we're going to be able to effectively recreate this entire stack on our own. We need the participation, and we need the buy-in from a lot of these industry players in order to really see a large-scale adoption of our technology. So let me move to the next one. So, I can give you guys a little example of the flow of data. It's pretty high level. Effectively, up here, the buyer and seller, when they come together, the match still happens off-chain, as it does today with most. Even cryptocurrency exchanges, those are still centralized for the most part. They're centralized entities that are doing the seller and buyer matching. And so in our system, it works very similarly. And then when the match happens, then the infrastructure can validate in real time that this real asset is actually held by the person, because it does a real-time check with the seller's custodian and then the buyer's custodian to ensure that the funds are actually available. At that point, it can simply notify the other participants in the ecosystem, primarily the transfer agent, who then is actually the one that then effectuates the actual trade. And so then it updates the book and records to show that the seller is no longer the owner of the asset, and now the buyer is the new owner, and it happened on this date and at this price. And then all of that obviously is written back. And so what's interesting here is, steps 1 and 2 are typically what a central counterparty clearinghouse does, right? I mentioned that all they do is effectively ensure that everyone's playing honest, that the seller actually owns the asset and the buyer actually has the funds for the asset. And it's such a quaint concept, right? If you have this mechanism to do this real-time check and to do this real-time validation across the network, there is no need for this entity called a central counterparty clearinghouse. Likewise, step 2, 3, and 5, that's all a central securities depository does. It just kind of maintains, it coordinates across the different parties in the ecosystem, updates the books and records, and then lets everyone know that this trade happened and it effectively went through all the way. And so all of these different mechanisms effectively were performed by these entities that were built up over the decades of interaction between these different players in the market. And as the market kept evolving, these entities became almost like your appendix, right? It's this organ that no longer really serves a purpose, but it's just sitting there, just kind of dragging you down, and occasionally it blows up, and then bad things happen. But that's effectively what's come to happen with these entities over the course of the growth of financial markets. So yes, some of the mechanisms that our system has, obviously I covered, decentralized securities depository system. just a trustless clearing and settlement process. We do need to maintain the data. The specific sensitive data has to be stored privately, so we do use a federated sidechain to accomplish that. Certainly, that's a restriction right now of current technology. As the technology matures and continues to evolve, we see that changing. And then the actual system also operates on a proof of authority model, where the authority entities like broker dealers, custodians, transfer agents, and other entities like that are registered with the SEC or FINRA have different additional capabilities than other participants in the marketplace. With this framework, we're able to create a global asset registry. And basically, the big thing there is just standardizing the data that is used to communicate back and forth between all these different data silos. Right now, there is no uniform data format. Everyone, sometimes, they communicate over paper. They'll fax each other data and reconcile their databases that way, because there is no shared protocol, there is no shared mechanism by which they can communicate with each other. And then it also allows for certain features such as investor passport, like the ability for a retail investor to perform one action or get verified to do certain things with one broker dealer or one entity or one portal, and then use that same verification model across the board without having to provide the same information, the same sensitive data getting transmitted over the network. So, as I mentioned, some of our market rollout techniques, there's no way these banks build into us. We have to build into them. That's just plain and simple. It's one of the hard lessons we learned right away, that these guys have no interest in adopting cutting-edge technology. They're barely adopting e-signature technology. And so for us, it's about building these open-source network adapters, launching a public API for others to build on top of and plug into the network. Embedding applications so that these brokers can just drop these apps onto their current trading or client-facing dashboards, and to give everyone within their client base access to this infrastructure we're building. Our initial target audience is basically all the brokers, the 600,000 plus brokers, 375,000 plus advisors, and individual investors as well. But quite frankly, we do see this big move, obviously, as everyone else is seeing, towards a lot more self-directed, driven investors. And so ultimately for us, it's giving the retail investor that access and opportunity to perform their own financial decisions and manage their own portfolio without the need for one of these intermediaries in the mix. Let's see. Here's our team. That's me. My partner Jordan is JD MBA. He was involved in the Jobs Act writing, the thing that allowed for equity crowdfunding to be mainstream, which is something we're still seeing today. It's funny, with all these ICOs, we're actually starting to see a convergence from crowdfunding and ICOs into more of like Reg D or Reg A type ICO offerings. Our other partner, Dan Breen, has been in this industry for 25 plus years. Our head developers, Cale Shipman, Thomas McInerney, working hard on the open API and building out the distributed ledger solution. And then Ian's our resident mathematician, because every team needs a resident mathematician if you're playing in this space. Some of our investors, I'll skip this. Roadmap. I think I spoke to most of this. So let me actually walk you guys through a pilot we're actually working on. And actually, I'll stop first for questions, and then I'll dive into this pilot. Does anyone have any questions? Certainly today, that's done across multiple silos across the board. We just talked through right there. That's crowdfunding, right? That's crowdfunding across every portal. And today, there's over, let's call it 350 portals of different varieties, be it real estate, be it investment, small companies like Start Engine or Seed Invest, or some more exotic stuff like theater performances. I've seen those as well. And so there is a different, there are, these multiple portals out there that perform this type of activity for millions of investors today. But let's say you want to participate across more than one of these intermediaries. You're going to have to go to each of them, get registered, do your AML, KYC, do your investor accreditation check, upload, link a bank account information. So you have to perform the same action across multiple parties in order to actually get access to the full spectrum of offerings available. That's one of the offerings that we provide on a platform with the Global Asset Registry and the Investor Passport mechanism. That's more of a nice to have, though. I'll be honest. Our bread and butter is the back office. So what I just described to you is all the front office work, all the marketing, all the due diligence, putting the packet together, then sending it out to the entire investor community. So that's more front office stuff. I think where our platform really shines is on the back office. And that's an area where, quite frankly, that's where the sausage gets made, and that's, you're not seeing any of that, because that just happens because your portal is handling that for you, or your advisor or your broker. In return, they're going to charge you some fees because they're doing a lot of work on your behalf. And so that's where our portal comes forward and I think really shines and provides a level of efficiency that hopefully gets passed on to you in the form of lower fees. Certainly, I cannot guarantee that. The intermediary may choose to keep those fees, but that's more the space that we specialize in. Is that fair?
Sure. It still doesn't answer if the back end is what's important. That's my least important concern in one of these transactions. Is that?
That's fair. That is your least concern because you don't see any of that today. But to the folks that are actually then processing your securities transaction, that's where the bulk of their overhead goes in terms of all the back office processing. So if I won't go back to the diagram, but basically they'll, in order to actually then take your signed securities documents, the funds, process them all downstream. If it's with a registered vehicle, then they have to send them to a transfer agent. If it's with a private vehicle, if there's a fund administrator involved, they'll send it to the fund administrator, or they'll send it to the lawyer that's facilitating, that's keeping the books and records. And so there is a whole process back there that is very manual and very repetitive across the industry. And that's the area that we're focused on. And that effectively, that's the clearing and settlement process. And that's the bulk of what we work on. Cool. Any other questions?
If like FINRA or these regulatory agencies, the Edgar database you mentioned, if those went away, like the U.S. government ceased to exist, what would take its place?
Yeah.
Is that kind of your?
I love these questions that are, what if the U.S. government ceased to exist? And can everyone hear the questions? I apologize. I have not been repeating questions. So if the U.S. government ceases to exist, I mean, certainly we probably all may have bigger problems than what our platform is going to do.
Well, certainly much of this stuff is important to keep track of.
Yeah. If the U.S. government ceases to exist, then certainly we cannot lean on their Edgar database system, which is effectively just a public database mechanism. Our global asset registry builds on top of that. We pull data from Edgar, obviously, because that is a golden source. So if the U.S. government ceases to exist, then at least within the small sliver of the world that we operate in, then we would be able to pick up their slack and facilitate an Edgar-like mechanism and provide that oversight and regulatory compliance review for the industry. And our hope is that, and what we're working on with the regulators is effectively providing a mechanism by which they can conduct that regulatory oversight and compliance review in a much faster level. So rather than doing audits where, and this is actually what happens in real life, they'll come to us, SEC will come to us every month or actually every quarter and demand an audit of our transactions, and they'll just spot check a couple dozen, and they'll demand to see all the paper behind it. These are real audits we go through today. And so rather than having them do that across, let's call it hundreds of broker-dealers like us, if all these transactions are already logged to a mechanism that they can access in real time and immediately verify and know that these are immutable record sets, then we're helping them do their job a lot easier. So hopefully they don't blow up and disappear tomorrow, but whatever survivors are left will be able to do their job a lot easier. Optimistic. Okay, so I don't know if I'm going over my time. Okay? All right. I want to walk you guys through this example because this is fantastic. I love this. So there's a thing called a gold medallion signature stamp. So you, sir, you own private securities. Have you ever tried to transfer them, sell them to somebody else?
Yes.
Did you need to? You did not?
They were unregistered.
Oh, they were unregistered. Okay. So if they had been registered assets, you actually have to use this thing called the gold medallion signature stamp. It is a literal stamp that has special ink that the industry, everyone in the industry uses. There are 5 million transactions a year that are done using this damn physical stamp. And then what's great is on the other end, there's an actual physical reader that reads and verifies that the stamp is legit, because the stamp uses a special green dye that has some sort of metallic nonsense in it. And so this is how they verify today that when someone goes to transfer their securities, that when they sign the documents to transfer those assets, they have to go to someone's office to verify that they are who they say they are. They have to show photo ID. This is effectively like a super notary stamp. And so they go to a bank, for example, and not many banks offer this. So often you'll have to drive, a couple of hours to go find one of these specialized banks that offer this physical stamp device. And the bank will take your photo ID, they'll look at you, they'll make sure you're of sound mind, and then you'll sign the document, and then they'll stamp on top of it. So it's a notary on steroids. But this is something that effectively today, it's an industry utility. It's like one of these counterparty clearinghouses that all the industry participants pay into this. Citibank, JP Morgan, they all use this mechanism. They likely have them squirreled away in some corner, but everyone in the industry uses these types of devices. And so what's great is these things don't actually work across if you scan them. So let's say you sign a document and somebody scans it and emails it to someone else. They won't be able to verify that the stamp is authentic because the stamp relies on this metallic ink that won't scan well. And so the makers of this device were tasked with making a digital version of their product so that the industry could start, actually using digital scans and e-signatures. And what they came forward with was, and I don't have pictures because it's only a prototype, they came forward with a bigger stamp and a bigger reading machine. And they said, and they were at an industry conference, this just happened like a month ago, and they asked everyone in the industry to just pay more money to support the rollout of this new, bigger stamp and bigger reader. And everyone in the room just, I was not there, but I heard tomatoes were thrown or something to that effect. So people were not happy. But creates an opportunity for us, obviously. And so the associative body behind this mechanism, they're called the STA, the Securities Transfer Association. They actually approached us to put together a actual digital signature stamp. And so this is one of the first prototypes that we're working on. This is set to go to market. We've got a pilot out there, but we're set to roll it out to independent third-party folks who are going to use it in actual transactions later this month. And so not a very complex use case. I'll let you guys read it. But this, the thing to note here is this is not a revolutionary use case. This is a very practical use case to get around this physical device monstrosity. But the industry, a lot of the participants are just not looking to invest the time and effort into this type of technology. And so this is where there are opportunities for smaller players, innovators, startups like us to create this type of technology and roll it out to market quickly and efficiently, and quite frankly, capture tons of opportunity where these slower counterparts cannot compete with. And so this is something that we are pretty excited about. I mean, this literally just happened, 3 weeks ago. They approached us and said, hey, we've heard you guys are doing something like this in our industry. Can you roll out a pilot for us so that we can tell this other company to go away and to leave the industry? So that's been a very, very interesting challenge to roll something out this quickly. But again, the demand is there. They didn't care so much that it was blockchain. They just cared that we had a cheaper, faster way to get something to market, and that's what excited them. So I'll leave it there. If there's any other questions, I'm happy to take them now or afterwards. And then I believe we have the very exciting Tor from Enigma afterwards. Yes, sir.
So you're building this on top of the ERC-20 or some other?
Yeah, so we're using a pretty straightforward fork of the Ethereum ledger for this. There's some mechanisms that have to be private because there is actual personal identifiable information that's being used here. But this is a very vanilla implementation of this solution. I'm sure half the people in this room could code this right now. Any other questions? Nope. Great. Thank you guys so much.
Keep it going from Juan, everybody. Putting on a show, entertaining us all. And right now we're going to relax a little bit for just a minute because I don't want Tor having to talk through everybody running over there for pizza because there is some pizza there. So go ahead and grab some pizza. I'm going to set up for the next couple presentations. You got 4 minutes. 4 minutes, and then our next presenter is going to be up. So it's still there. Still there. Come on. I know it's an Enigma, but you're going to want to see it. That was awful. Yeah. All right, guys, come in, settle down, bring your pizza, bring your friends. Come on up here, pack it in, pack it out. Well, as long as this is up here, I might as well tell you to go to www.chicagoblockchainproject.com. That's our little MVP site, but anybody who wants to help us with building and compiling data and so forth on it, feel free to reach out to me, shoot me an email. Make sure you check out Blockchain WTF, their website. They got an awesome quizzes for like, what do you guys have? Beginner, intermediate, and advanced blockchain knowledge quizzes so you can test yourself. Really cool stuff. I did a couple videos with them, so you get to look at my face again. I know it's exciting. All right, everybody's back up here. Guys, if you're wondering about our chat channel, Chi-Town Crypto. There's a bunch of people in there. You can find people who do projects with and stuff. Get on there. Check out my website, disruptionjoe.com. All right. Guys, I'm going to need your attention one more time here. We got another 2 presenters. We got Tor with the Enigma project coming up, and we have Bill Mueller's talking about the Bitcoin futures, which I know you're all very excited about. So, without further ado, everybody give a big round of applause for Tor with the Enigma project.
Thank you, Joe. How's everybody doing? Am I good here? Yep. Hey. Oh, that's cool. How's everybody doing? How's the pizza? Excellent. Please don't fall asleep. I had 2 slices myself, so if you see me start to tip over, just, it's all good. I am fine. I'm just full. But I'm super excited to be here. So my name is Tor. As Joe said, I work for Enigma. I'm the head of growth and marketing for Enigma. I usually like to start when I do these types of presentations with a couple of questions because while there's a lot of you in the room that I've seen before, there's definitely a lot of people that I've never seen before, and it's really exciting to meet all of you and to have you here. So one question that I have normally is raise your hand if you would consider yourself a novice at blockchain. Okay, raise your hand if you would consider yourself an expert at blockchain. By process of elimination, everybody else, and notice I didn't raise my hand, everybody else is somewhere in between, and that is awesome to know. To all the novices, self-professed, welcome. This is awesome. One other question would be, how many of you in this room currently hold any type of crypto asset? That would be Bitcoin, Ethereum. Okay, lots of people. How many people in this room hold a crypto asset that is not any of the Bitcoins or Ethereum? Fewer, got it. And how many of you are actively trading any of these products versus just holding? All right, very cool. Because this is Chicago, it's a trading town. My background, actually, I was an options market maker for about 4 years here. I traded a lot of CME products. Pretty much every future, I think, an option that you could. That was really fun, but I'm doing something totally different now. Now I work for Enigma. Enigma was founded by a couple of MIT graduate students, I myself was an MIT graduate student where I met the co-founders, and now we're building our project together. So normally when I've been up here recently, I've talked about primarily our product Catalyst. So Catalyst is a data-driven investment platform for crypto assets, and it's really exciting, and I'm definitely going to talk a lot about it, but since I have the room, and since it's pretty much the big reason for our project to exist, I'm actually going to talk about the Enigma protocol a lot, which I haven't gotten the opportunity to do as much, so I'm really excited to be able to do it. Normally I talk about Catalyst because it's a lot more tangible. It's currently live in alpha. You can use Catalyst to backtest crypto asset investment strategies using historical price data. It's a toolbox for that, and then you can also execute these strategies live on crypto asset exchanges, the major ones anyway. And I will get into that a little bit more later and why we built it, but I do need to talk a bit about the protocol, the Enigma protocol, and why we're doing it and what it will mean. So first of all, I want to talk a little bit, I missed Joe's talk, but I've heard him talk before about this stuff, and he does such an amazing job talking about the promise of blockchain and Bitcoin and all of these innovations and what they can enable. And I think one of the issues that's come up really recently in the space and is going to keep coming up again and again is this issue of scalability of blockchains. And that's an issue for many reasons. One recent reason that came up was block size, but that's not really the whole reason that there's issues with scalability with blockchain. And it is an exponential problem. And so even now, any decentralized application that's being built on a blockchain that's professing to have all of these, future potentials, future growth, everybody's running into a lot of the same issues with scalability and like what that will mean. So there's, for example, does anybody know EtherDelta? A couple people, okay. EtherDelta is a decentralized trading exchange for Ethereum tokens, for ERC20 tokens. And it's amazingly successful. I think it's probably the most successful decentralized application there is right now. And on some days, it will totally clog the Ethereum network. Even just at the scale that the crypto trading ecosystem is at right now, it can totally clog it, which is crazy. But that's the early days we're in. Like, I want to stress throughout all of this that this is super early days for this industry, for these products, for these applications. And a lot of the value that you're seeing is speculative value on all of this being ultimately incredibly disruptive. To a certain extent it already is, but one of the biggest issues is scalability. And one of the biggest issues with scalability is data. And I think Juan touched on this a little bit when he was speaking. Part of the issue with data is that you can't really store it on-chain, especially like what we would consider big data. That's not really feasible right now. That's not what a blockchain can do. And then the other issue is the privacy of that data. If data that's stored on a blockchain is not innately private. Truly sensitive data really can't live on-chain. That's why it's necessitated to have these second-layer networks, these outside solutions. So what is Enigma? Where do we come in? I'm sorry that I don't have like slides to point at. I'm actually really not super into slides, but I can definitely tell you what Enigma is. Enigma is a protocol that's going to aim to solve these issues of scalability and privacy for blockchains. And it's an off-chain network. It's blockchain agnostic. So the idea is that Enigma can be used in conjunction with a blockchain to enable scalability and privacy. From the data perspective, this is all based, by the way, on our co-founder, Guy Ziskind, also our CEO. This is based on his MIT thesis. So the white paper for our project has been downloaded, I would think, about 100,000 times. We have other white papers in the space that are about storing and accessing personal data in a decentralized system securely. That's one of the most highly cited white papers in the space. So he's definitely a guy who knows what he's doing. I will admit to being the head of growth and marketing, not being Guy himself, but he is a genius. If you I hope he comes out to Chicago soon so you get a chance to meet him. And again, we're blockchain agnostic, so we're not tied to a single chain. And what that means is we have our own independent token. That's kind of necessitated. And it's also, the token also exists to incentivize the network to store and compute over the data. So our token is ENG. Normally I would be up here pitching something that sounds a lot like a ICO or token sale. We already did it. So our token sale was in September. On September 11, we closed it in about 4 hours. We raised about $45 million in Ethereum and Bitcoin, and that's all basically going back into developing exactly what I'm telling you about right now. What I just described in terms of solving these issues of scalability and privacy for data by creating a decentralized data protocol, that's not simple. That is by far one of the most challenging problems in this space. And if you imagine a future where blockchains are scalable and we achieve a lot of the promises of decentralization, this is the type of solution that absolutely has to exist. And this is what we're committed to building. And we have the people to do it. We have the funding to do it. We're developing partnerships with the people who can help us achieve it. That's the big vision for the protocol. So we're pursuing academic partners, we're pursuing professional partners, but the thing is we really had no intention of making this a purely academic project, even though we all have MIT affiliations, and it could have lived within MIT. It could have never left. That was never our intent. We definitely wanted to build something that was going to make a difference now. Which leads me back to Catalyst. So Enigma is the protocol level solution. It's going to enable a decentralized data marketplace where data can be exchanged between data curators and data creators and data consumers. And the first application for this data marketplace is the product that we're developing, and it's called Catalyst. Catalyst is primarily concerned with crypto financial data. So think about historical market pricings for crypto assets or sentiment data. And it's also concerned with being an execution platform, integrating with crypto exchanges so that if you develop a trading strategy or investment strategy based on this historical crypto financial data, you can also go and actually implement that strategy directly. So we're integrated with a number of exchanges. We recently announced a partnership with Kyber Network, which is a decentralized exchange, which is in development. But we're also partnered with EtherDelta, which is a decentralized exchange that I mentioned earlier. They're currently live. They are one of our major data partners, and we're working with them actively to integrate their data on the platform. Another data partner that we have is InvestFeed. InvestFeed, where's Matt? Where'd Matt go? Matt's hiding. Hi, Matt. Matt's from InvestFeed. InvestFeed is basically it's a social network that caters to crypto asset investors and traders. It's an amazing platform. And what they do is they allow people a forum to talk about their opinions on crypto assets, which is sentiment data. And one of the biggest drivers of market performance for crypto assets is sentiment data. And these are the types of data sets that we're looking to bring onto the platform for Catalyst. Essentially, Catalyst is the application that's being built on the decentralized data marketplace where data curators like EtherDelta, like InvestFeed, are matched with data consumers who are the people who are actually creating these trading strategies. So Catalyst is live. I want to stress that it's already out. It's in alpha. I could tell you where to go. I don't think anybody's going to write it down, but please grab me afterwards if you're interested in trying the platform. It's definitely a powerful platform. We're adding more data to it constantly. We're very optimistic about all the progress that we're making with it. It's in constant development. It's one of our big focuses for 2018, but beyond Catalyst for 2018, we've got a couple of other major focuses that are more back on the protocol side, so I figured I would bring those up as well. This data marketplace that we're discussing, this decentralized data marketplace, right now with the stage that we're in with Catalyst, the data is held centrally by us. But 2018, we're going to start to decentralize this. We're going to issue smart contracts that secure data transfer. ENG, which is our native token, that's the token that represents essentially the transfer of data over the data marketplace. So it's a utility token. And when data is subscribed to by a data consumer, and when it is provided by a data curator, ENG is passing to the curator from the consumer. And this is done through smart contracts, and this is the transfer of ENG. But the other big thing in 2018 is then to have a testnet launch for the protocol where you can begin to store and compute over data. We're, as I said, working actively to develop partners here. We've had announcements recently. We're going to have more throughout the end of the year, but we're pushing on partners to help us really achieve that broader vision as well. I'm mostly here just to talk to all of you about what of that sounds interesting to you. Are people more interested at the protocol level or at the Catalyst level because it's live? The reason I care so much about the protocol level is because that, to me, when I like cast myself out a decade into the future and I think about like what's going to have to exist for all of this to make sense, for all of this technology to really get to where we're proposing it's going to go, I keep seeing proposals for projects where they're already assuming a lot of this infrastructure exists, where they assume these protocols are there, where they assume everything is infinitely scalable, and they're talking about, they're sizing themselves against quadrillion-dollar markets, and none of this could ever live in the way that they imagine that it lives. If any of that is going to exist, it's going to have to be with the enablement of something like the Enigma protocol. But on the other hand, Catalyst is also live right now. We wanted to solve a real problem in the space today, and I would say the biggest problem with crypto financial space is the data. It's not really trustable, not necessarily reliable, not easily accessible. I have friends who try to invest in ICOs and tokens, and everything disagrees with itself. There's no consistent, there's no standardization for even like naming of a currency pair. Everything is really, really messy. That's the main issue we're trying to solve with Catalyst, and it all relates back to this issue of our data protocol, making data usable at scale. So I'm happy to talk about either. I'm also happy to talk a little bit about the ICO, but not much. But yeah, that's the structured portion, absolutely.
So I'm wondering if you could maybe help me, kind of a novice in understanding. When you have a protocol, the idea is that you issue a token around that, and the more demand there is for the protocol, the more your token becomes worth. When I hear you talking about data and trading, in the old school way, you would get paid either to sell your data or to sell commissions in order to be able to execute those trades. Why do I need a token to execute on Catalyst instead of can I just buy the data? Can I get sediment indicators around Bitcoin or some of the other tokens that are out there?
Yeah, and that's good. Did everybody hear that question? Okay. The question was around like why do we need a token for Catalyst? Part of that ties back to what I was saying about the protocol level vision and why the protocol itself needs a token, because it's blockchain agnostic. But without talking about the value of a token too much, because I really can't, the utility is clear. The transfer of the token represents the transfer of data. You could build a solution that didn't require ENG. You could build your own parallel solution. Where tokens come into play is really in the network effects and having incentives, aligning incentives for data curators and data consumers. So without picking something like Bitcoin or Ethereum for everybody to transact in, it makes sense for us to have a native token for the platform. And again, the bigger reason is that it goes back to the protocol that it's being built on. ENG has a broader use within the ecosystem. It also makes sense for it to have a place on Catalyst. We're intending ENG to be the native token for any application that's built on the protocol level.
So, and when you look at ICOs in general, you see that a lot of them might not necessarily need a token, and that protocols are really going to be for people that want to leverage that network effect in a big way.
Speaking generally, thank you. Yeah. There's plenty of projects that are trying to come out that don't need a token. I think everybody who's looked at like any of the ICOs that I think I heard there were 50 today listed. Somewhere between 35 and 50 ICOs happened today, according to like ICO Alert. I went and I looked. I didn't believe it, so I went and I looked. It's a lot, especially since somebody told me they were going to be like 200 in November, and I was like, wow, that's a lot. If there were 50 today, I imagine there's going to be 60 tomorrow. So there's no way that all of these ICOs require a token, and I can also say confidently that a lot of them are not at the protocol level. A lot of them are decentralized applications, potentially. And again, they're assuming the scalability of these blockchains. They're assuming the scalability maybe of the Ethereum network. They're making a lot of assumptions about a future that has really yet to be built. Like, we're acknowledging that there's a lot of work that needs to be done in order to make blockchains work at scale. And that's where we're trying to come in. That's where we believe the industry is. And at the same time, we're building Catalyst because there should be immediate utility. If you're a company in the space, you should be providing utility immediately, especially to a community of core supporters. This is one thing that people have told us is their biggest issue with data right now is crypto financial data. And if we can solve that while at the same time, scaling what we're trying to do at the protocol level, then I think we've succeeded. And without speaking for any other project, I know that there's also a lot of legitimate projects in the space with a ton of promise. I would say everybody should do the research for sure, because I've seen a lot of things that, beyond not needing a token, don't really need to exist. Was that diplomatic enough? I don't know. Yeah.
You talked earlier about curators, and you also gave an example of how all the data is informed correctly or appropriately. So if can you talk a little bit about data quality and how you're planning on resolving that, and maybe how it's better than what exists right now?
For sure. So the question was around, you were mentioning the data curators again, and you were asking about data quality and how it's... Yeah, we're definitely concerned about data quality, absolutely. It starts at the source, whoever's generating the data, right? We generate some of the data that's on our platform. We're curating it ourselves. Then we have partners who are curating their data, and they receive ENG for people subscribing to those data sources. You couldn't go and poke around with Enigma. This is what's in development. This is what's representing like a big academic leap forward in the space, essentially. When it is decentralized, yes. 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 So we have the white papers. They're... Right. Yeah, exactly. So we are, so the white paper is available on www.enigma.co. If you didn't Google it already, you can definitely go check it out. This is the one that I'm saying has been like highly downloaded, highly cited in the space. So you should be able to find it. If you look up some other projects trying to do what we do, there's a 50-50 chance we're cited. So you can kind of see what we're about. Also on our blog is where we try to break it down into plain English. We're going to keep trying to do a better job of that. But if you go to blog.enigma.co, that's where the blog is found. You'll see we'll do regular developer updates. We're going to do partnership updates there. We did a lot of updates around the time of the ICO about the ICO, but now that that's passed, we're very much focused on making sure everybody's informed about our development, about the platform, and so on. Back there. That is a good question. So the question is, how can we guarantee that we're going to succeed? Well, okay. I think there's a few assumptions baked into there, but what I can say, and we can take it offline, I'm happy to, is that there's no guarantee that anything in this space is going to succeed. I can't tell you what's going to happen with this, with what's happening with Bitcoin right now. I can't tell you what's going to happen with Ethereum. What I can tell you is that everybody's going to face the same issues eventually. Any blockchain, anyways, is going to face these same issues around scalability and privacy, and that's what we're working with. Catalyst, it's right in the name. Catalyst is the catalyst. It's the starting point for this network. It's finding an immediate utility for the data marketplace. It's finding an immediate utility for the token. And from there, we build out the applications. I agree with you that it would be really weird to live in a world where to go to Walgreens, you had to use Walgreens bucks, and to go to any other store, you had to use their specific currency. But that's not really what we're talking about. We're talking about a protocol that can interact with any blockchain, being blockchain agnostic. It's to enable scalability, not to centralize transactions in the space. So we should absolutely take it offline, because it sounds like you have a lot of familiarity with this, and I can definitely get you in touch with Guy and a lot of other people who have considered the technical implications, but I don't want people to get the impression that we're trying to centralize things and force you into using something. This is to enable scalability of blockchains, any blockchain, and that's the nature of the technology. One in the back, yeah. Sure. At this moment, so is Catalyst built on the Enigma protocol? At the moment, I think we sort of touched it. It's still, this data that is being consumed on the network is still centralized. It's what we've curated and consumed. But in 2018 is when we're moving things to the decentralized data marketplace protocol. And it's, if you're providing data in the marketplace, you will receive ENG in return for the consumption. And that's coming, but it's not current. Is that a good answer? Yeah, and the protocol remains in development. As I said, the protocol is not currently live. Right now, Catalyst is built. If you go and use it, it's essentially a Python toolbox. You can go check it out. It's live right now, and we're in the active process of moving that process of consuming data over to the data marketplace. But the broader vision also is not just making the data more broadly available, it's making it more consumable. It doesn't do you any good if you have really great data on your platform and it's completely unusable. So we're also including in Catalyst the tools for developing trading strategies and executing those trading strategies, that is the platform. That's what's being built. Catalyst is an application. You know, it's going to be a decentralized application built on the protocol. Right now, it's just useful. But we're getting there. Yeah. Sure. Is there room for somebody who's only going to do one piece of this equation? I think it's kind of too early to say for sure like what a real solution is going to look like. From our perspective, maybe this does go back to the Walgreen Bucks example. You know, maybe there does need to be a more robust solution to both the issue of scalability and privacy and compute and like decentralized computing. Like maybe there does need to be, and it's something that we're definitely attacking with this. And we've already identified some initial problems that we're aiming to solve with it. So there's probably room in the short term for many people to attack the same problem. I would absolutely encourage there to be more than one solution right now to attack this problem. I don't know what's going to happen or when. Does that make sense? Okay, cool.
I'm just curious. Yeah, I'm just curious about your comments. If you read the Reddit, there's the article about, so you mentioned the buzzword, centralization or decentralization. This guy is saying Bitcoin is centralized and filled with misinformation, censorship, and controlled by a single entity, which even mentioned the name like blockstream, and also there's demos. Do you have knowledge about or comments? Is that really?
I'm not 100% sure I'm following. Yeah, what's up? Cool, no comment. Yeah. Right, so we are an ERC20 token. Right now, we are remaining an ERC20 token. That is something that we're considering. It sort of depends how certain things in the space play out right now. It's whatever's going to allow us basically to remain blockchain agnostic to the best of our ability so that we can work on scalability for multiple projects. Is that a good answer? Okay, cool. I think we're... Are we cut on time? Or do we want...
Let's cut it on time.
All right. Thank you guys. I really appreciate the time. You can go to www.enigma.co. I'm Tor at enigma.co. Thanks for your attention, guys. I really appreciate it.